Hello, everyone. Welcome to the market opening bell on Friday, August 22nd, your 10-minute guide to the stock market. The market continues to focus on Federal Reserve Chairman Jerome Powell's speech schedule for Friday, with Hong Kong stocks showing a soft and volatile performance. The Hang Seng Index opened 50 points higher but fluctuated downward, dropping as much as 165 points in the afternoon to a low of 25,000 points. The decline narrowed slightly toward the close, ending the day down 61 points or 0.2% at 25,104 points. The Hang Seng China Enterprises Index fell 38 points or 0.4% to 8,974 points, while the Hang Seng Tech Index dropped 42 points or 0.8% to 5,498 points. The total market turnover was 239.4 billion Hong Kong dollars, down 16% from the previous day. Southbound trading recorded a total transaction volume of 137.5 billion Hong Kong dollars, with net inflows from southbound funds amounting to 7.461 billion dollars compared to a net outflow of 14.682 billion dollars the previous day. Net purchases included Tencent at 1.871 billion, Meituan at 1.391 billion, Xiaomi at 1.274 billion, Laopu Gold at 255 million, and CSOP Hang Seng Tech ETF at 137 million. Net sales included Tracker Fund at 824 million, CTE at 630 million, Alibaba at 281 million, Mobvista at 226 million, SMIC at 188 million, Zhong'an Online at 132 million, and Oriental Selection at 127 million. According to statistics, southbound funds have net purchased Tencent for 5 consecutive days, totaling 5.572 billion, and Xiaomi for 3 consecutive days, totaling 2.198 billion. Technically, the Hang Seng Index tested the 25,000 point support level again, but lacked upward momentum and failed to hold above the 10-day moving average at 25,170 points and the 20-day moving average at 25,113 points, remaining in a consolidation phase. Mainland Chinese market surged but later retreated, with major indexes showing mixed performances. The Shanghai Composite Index peaked at 3,787 points but closed at 3,771 points, up 5 points or 0.1%. The Shenzhen Component Index reached a high of 12,011 points but closed at 11,919 points, down 7 points. The CSI 300 index hit 4,308 points and closed at 4,288 points, up 17 points or 0.4%. The Chinex index peaked at 2,626 points but closed at 2,595 points, down 12 points or 0.5%. The combined turnover of the Shanghai and Shenzhen markets was 2.424 trillion yuan, up 180 billion yuan from the previous day. Since August, the accelerated rise in A shares has attracted more foreign capital. Data shows that as of August 18, South Korean investors' holdings of Chinese stocks, including A shares and H shares, increased from 19 billion yuan at the end of 2024 to 24.5 billion yuan, a nearly 30% rise. In terms of individual stocks, South Korean investors have shown a strong preference for Hong Kong-listed stocks, with leading tech and emerging industry companies like Xiaomi, Tencent, BYD, and Alibaba being the primary targets for increased holdings. The renminbi central parity rate ended 2 days of declines, set at 7.1287 against the US dollar, up 97 pips from the previous trading day. Sources indicate that China will review a new roadmap for renminbi development later this month, considering the launch of an renminbi-pegged stablecoin to promote its broader global use. The roadmap is expected to include targets for the renminbi's use in global markets, outline the responsibilities of domestic regulators, and provide risk prevention guidelines. Chinese senior leadership is expected to hold a meeting as early as the end of this month to discuss renminbi internationalization and stablecoin issues, setting the tone for stablecoins and clarifying their commercial applications and development boundaries. On the earnings front, AIA reported a first half shareholder net profit of 2.534 billion US dollars, down 23.54% year on year, with basic earnings per share at 0.24 US dollars. The interim dividend increased by 10% to 0.49 Hong Kong dollars per share. On a constant exchange rate basis, new business value rose 14% to 2.838 billion US dollars. Annualized new premium increased 8% to 4.942 billion dollars, and the new business value margin rose 3.4 percentage points to 57.7%. By market, AIA's Hong Kong business saw new business value increase to 1.063 billion US dollars, up 24% on both constant and actual exchange rate basis, with strong double-digit growth in new business value from both local customers and mainland Chinese visitors. In China, new business value fell to 743 million US dollars, down 4% and 5% on constant and actual exchange rate basis, respectively. Bank of East Asia reported a first half shareholder profit of 2.407 billion Hong Kong dollars, up 14.02% year on year, with basic earnings per share at 0.86 Hong Kong dollars. The interim dividend was 0.39 Hong Kong dollars, up 25.81%. Net interest income was 7.344 billion dollars, down 10.74% year on year. Due to falling interest rates, the net interest margin narrowed by 22 basis points to 1.88%. Non-interest income rose 29.21% to 2.915 billion Hong Kong dollars, with net fee and commission income up 16.64% to 1.654 billion dollars, driven by sustained growth in investment activities and third-party insurance policies sales. Impairment losses on financial instruments were 2.539 billion Hong Kong dollars, down 11.87% year on year, with commercial real estate in mainland China and Hong Kong continuing to impact asset quality, accounting for 70% of loan loss provisions. As of June, the group's impaired loan ratio was 2.63%, down 0.09 percentage points from the end of last year. Sinopec reported first half operating revenue of 1.41 trillion yuan, down 10.6% year on year, mainly due to lower prices for petroleum and petrochemical products and reduced sales of refined oil products. Shareholder net profit was 21.483 billion yuan, down 39.8%, with earnings per share at 0.177 yuan. The interim dividend was 0.088 yuan. The company optimized its annual capital expenditure plan, reducing it by about 5%, with first half capital expenditure at 43.8 billion yuan. Kuaishou reported second quarter total revenue of 35 billion yuan, up 13.1% year on year, with adjusted net profit at 5.6 billion yuan, up 20.1%, both exceeding expectations. The adjusted net profit margin reached 16%, a record high for a single quarter. Due to strong business performance, the board declared the first ever special dividend since listing of 0.46 Hong Kong dollars per share, totaling approximately 2 billion Hong Kong dollars. In terms of business, second quarter online marketing services revenue grew 12.8% to 19.8 billion yuan. E-commerce GMV rose 17.6% to 358.9 billion yuan. with an average of 134 million monthly buyers. Short video e-commerce GMV grew over 30% year-on-year, with new merchant onboarding up 50%. Live streaming revenue increased 8% to 10 billion yuan, and overseas business revenue rose 20.5% to 1.3 billion yuan. Keling AI generated revenue exceeding 250 million yuan. Bilibili reported second quarter total net revenue of 7.338 billion yuan, up 19.8% year-on-year, with gross profit up nearly 46% to 2.676 billion yuan, achieving a gross margin of 36.5%, up 6.6 percentage points. The company recorded a net profit of 219 million yuan compared to a loss of 609 million yuan in the same period last year, with earnings per share at 0.52 yuan. On a non-GAAP basis, adjusted net profit was 562 million yuan compared to an adjusted loss of 272 million yuan last year, with adjusted earnings per share at 1.34 yuan. By business segment, value-added services revenue was 2.84 billion yuan, up about 11%, driven by increased revenue from live streaming and other services. Advertising revenue was 2.45 billion yuan, up about 20%, mainly due to strong growth in performance-based advertising. Mobile gaming revenue was 1.61 billion yuan, up about 60%, primarily due to the strong performance of the exclusively licensed game Three Kingdoms Strategic Edition. IP derivatives and other revenue fell about 15% to 440 million yuan. Miniso reported second quarter total revenue of 4.97 billion yuan, up 23.1% year-on-year. Net profit was 910 million yuan, down 22.6%. The gross margin was 44.3%, up 40 basis points from last year. Adjusted net profit was 690 million yuan, up 10.6% with an adjusted net margin of 13.9%. As of June, Miniso had 4,305 domestic stores, adding 30 in the quarter, and 3,307 overseas stores, adding 94. The strategy of opening good stores and big stores proved effective, with same-store sales turning positive and significant sequential improvements in both China and overseas markets. By June, Miniso had opened 11 Miniso Land stores and 1 Miniso Space store in core Chinese cities, with the global flagship Miniso Land store surpassing 100 million yuan in sales in 9 months. China Resources Power reported first half revenue of 50.267 billion Hong Kong dollars, down 1.7% year-on-year. Net profit was 7.872 billion dollars, down 15.9%, with earnings per share at 1.52 Hong Kong dollars. The interim dividend was 0.356 dollars compared to 0.455 dollars last year. Core business profit was 8.278 billion dollars, up 0.1% year-on-year. China Power reported first half revenue of 23.858 billion, down 9.9% year-on-year. Net profit was 2.587 billion yuan, up 0.7%, with earnings per share at 0.21 yuan. No dividend was declared. Companies announcing results today include CSPC Pharmaceutical, Ganfeng Lithium, Oriental Selection, Block, Dongfeng Motor, Brilliance China, Zhaojin Mining, and Shifeng Gold. China Coal Energy, CITIC Resources, Luoyang Molybdenum, CRRC Times Electric, China Tobacco Hong Kong, Goldwind Science and Technology, Zhou Liufu, Rimijin, and Sinopharm. U.S. initial job claims significantly exceeded expectations, and with markets awaiting Federal Reserve Chairman Jerome Powell's speech today, U.S. stocks performed weakly. The Dow Jones Industrial Average fell as much as 359 points during the session, closing down 152 points or 0.3% at 44,785 points. The S&P 500 index dropped 25 points or 0.4% to 6,370 points, marking its fifth consecutive trading day of declines. The Nasdaq Composite fell 72 points or 0.3% to 21,100 points. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, rose 102 points or 1.3% to 7,709 points at close. New energy vehicle stocks surged, with NIO up 9.3% and Xpeng Motors up 11.7%. Miniso gained 6.4%. Among Dow components, Walmart saw its stock slide 4.5%. The company reported a 56% year-on-year increase in net profit for the second fiscal quarter, ending July, reaching $7.03 billion, but adjusted earnings per share of $0.68 fell short of market expectations of $0.74. Revenue was $177.4 billion, surpassing expectations. The company noted rising costs due to tariff impacts. During the quarter, Walmart's U.S. stores saw same-store sales rise 4.6% year-on-year, driven by strong growth in groceries and healthcare products, slightly above the market's expected 4% increase. Sam's Club same-store sales grew 5.9%, also exceeding expectations. Walmart now expects full-year net sales to grow between 3.75% and 4.75%, up from the prior forecast of 3% to 4%, and raised its adjusted earnings per share guidance slightly to $2.52 to $2.62 from $2.5 to $2.6. Major tech stocks were soft, with Tesla and Meta falling over 1%, while Amazon, Apple, and Nvidia declined by less than 1%. The S&P Global U.S. Manufacturing PMI for August rose 3.5 points to 53.3, the highest since May 2022, surpassing the 50 threshold, separating expansion from contraction. The manufacturing upturn also drove the composite PMI, including services, to a yearly high. However, U.S. initial jobless claims for the second week of August rose by 11,000 to 235,000, and above market expectations of 225,000, marking the largest weekly increase in 8 weeks. Our stock pick today is China Resources Beer, stock code 291. Despite facing increased uncertainties in a continuously evolving consumer market, China Resources Beer achieved a beer sales volume of approximately 6,487,000 kiloliters in the first half of 2025, up 2.2% year-on-year, with a record high net profit of 5.789 billion yuan, up 23% year-on-year. The group's premium beer products continue to perform strongly, with mid to high single-digit growth in sales volume for sub-premium and above beers, and over 10% year-on-year growth for premium and above beers. Notably, Heineken achieved over 20% sales growth despite a high base last year. Laoshi saw sales surge by over 70% year-on-year, and Amstel doubled its sales compared to the same period last year. The group's total revenue in the first half of 2025 reached 23.942 billion yuan, up 0.8% year-on-year. Beer business revenue grew by 2.6% to 23.161 billion yuan, driven by continued premiumization, which led to a 0.4% increase in average selling price and savings in raw material procurement costs. This pushed the beer business gross margin up by 2.5 percentage points to 48.3%, while the overall gross margin rose by 2 percentage points to a record high of 48.9%. The group continued to optimize its production capacity layout, ceasing operations at two breweries in the first half. By the end of June 2025, the group operated 60 breweries in China with an annual production capacity of approximately 19,200,000 kiloliters. In terms of new product launches, the group actively embraced new consumer trends, introducing products such as German wheat beer, tea-infused beers like Huangshan Maofeng and Xingyang Maojian, fruit beers, Highland barley beer, and Hainan beer to meet personalized and differentiated consumer demands. It also launched the premium product Ken 14, developing a new category using Chinese-grown barley. In new consumption channels, the group's online business grew rapidly, leading the industry. It established strategic partnerships with platforms such as Alibaba, Meituan Flash Purchase, JD.com, Ele.me, and Weimar Songjiu, with online and instant retail businesses achieving nearly 40% and 50% year-on-year growth in GMV, respectively. Additionally, the group explored new business models, actively promoting rapid growth in customized and OEM businesses. In the Baijiu white spirit business, amid deep industry adjustments, the group recorded revenue of 781 million yuan in the first half of 2025, with the flagship product Zai Yao contributing nearly 80% of the Baijiu business revenue. The gross margin remained stable, with EBITDA of 218 million yuan. Looking ahead as the Baijiu industry shifts from extensive to refined growth, from quantity to quality, and from high speed to high quality development, the group will actively pursue price restructuring and stricter cost control. In terms of products, it will focus on developing Zhaiyao, Jinsha, and unpackaged products, promoting consumption in settings like banquets, and leveraging the established beer business distribution network to expand coverage and sales of mid-range and unpackaged products, aiming for approved sales in the second half. Suggested buy price to 27.8 Hong Kong dollars. Target price $30.5. Stop loss $26.5. I do not hold the aforementioned stock.